We're at war. It's gold versus the US dollar, and for once, we've got a superpower fighting on our side of this war, China of all countries. Normally it's us versus the banks, and we always lose that fight. This time, China is on our side, not because they like us, but because they like gold, and coincidentally, we do too. And this is bigger than the headlines are telling you, bigger than a rough 6 months for metals, bigger than anything America has thrown at gold in my lifetime. So if you hold gold, silver, have a 401k, a retirement plan, or even if you hold stocks, you need to pay attention to what's going on here. Because there's two groups that come out of the other side of this war. The large group who stay in dollars and wonder in 10 years why their shopping all of a sudden costs triple, and the small group who work out what's being built here and make life-changing money. So don't buy anything, don't sell anything, don't sign up for anything. Just watch for the next 15 minutes or so and I'll break it down for you. I'll show you what price China wants to push gold to. So let's start with a crazy fact that I bet you didn't know. To explain this, we need to go back to the year 2001. I picked 2001 because it's exactly 25 years ago, and also it's when I started my investment career. I've been doing this for 25 bloody years. Anyway, 2001, you have $30,000 to invest. You develop a dead simple portfolio. 10K you leave in cash, 10K in gold, 10K in SPX or the S&P 500. The cash is simple, it's just cash, so there's no calculations to be made. The gold you buy at $270 an ounce, so you get 37 ounces of it. SPX you buy at $1,250 because that's the level it was at back then. Flash forward 25 years to today, how much money is each position worth? Your $10,000 in cash is still $10,000 obviously, but it buys 50% of what it used to buy in 2001, so it feels like $5,000. Your SPX position has grown a fair bit from 1,250 to 7,400, so if you reinvested the dividends, you're looking at about 89, 90, 95K, not too bad really. But that 37 ounces of gold, guess how much that's worth today? Guess? No one? Okay, $151,000. Did you know that about gold? Be honest. Now, look, I don't want this to sound like a gold versus stocks thing because it's not. And the winner of gold versus stocks usually just depends on what date you start from. I picked 25 years ago. If you pick 2011, the answer might be a bit different. It's not gold versus stocks. It's everything else versus the US dollar. That's what matters because the dollar, in fact, all fiat currencies is a scam. And from when we were kids, our government trains us to be good little drones, earn dollars, put them in the bank, you'll get paid interest. But all that does is make bankers rich. And I just showed you the proof. If you put your money in the bank, it would have lost 50% of its value when you factor in the measly interest they pay you, basically nothing anyway. But if you put it in the S&P 500, you would have walked away with 89, 90K. If you put in gold, 150K. But why? Why? An ounce of gold is an ounce of gold. It doesn't grow, it doesn't earn interest. It's just a shiny rock that someone dug up like 3,000 years ago. So if the rock never changes, what's actually moved? The dollar did. Because gold's price is just a swap rate between two kinds of money. And only one of them can't be printed, gold. The dollar can be printed, obviously, they print trillions of it. So it's a seesaw, really. Gold goes up, the dollar goes down. They can't both win, that's just how it works. By the way, if you want to see how I'm actually positioned for all of this over the next 10 years, check out my free guide on how to retire by 2036. There's a link below, pop your email in and you get it. Plus you get my free weekly newsletter. I write about gold, I write about silver, I write about a lot of different stuff in my newsletter. Check it out. Anyway, now you might be thinking, what on earth does any of this have to do with China? Because the title of this video is China is going to send gold to this price. Well, I did that little exercise to show you that gold beats the dollar hands down over the long haul. Sometimes it even beats the stock market. And most governments in the world realize this because it's bloody obvious. But to see what they are doing about it, you need to know where a country actually keeps its money, because that is what sets the price of gold, really, in the end. Reserves are a nation's savings. Every country has a pile of reserves, and that pile has to sit in something. For about 80 years, that something was mostly US Treasuries. A treasury is just you lending money to the American government and they give you a treasury. You hand over your cash, they pay you interest, and they give you your cash back in the end. So the world's savings always ended up as America's debt somehow. It's a beautiful arrangement, if you're America, that is. They print the money, they buy things with the money, and then people lend them the money back as a loan. It's crazy. And then to pay off the loan, they just print more bloody money. But at some point, a lot of countries got tired of this arrangement. I mean, what is in it for the other country? One, it gives America way more power. Two, America is obsessed with printing money. So even earning 4% per year in interest, it hardly beats inflation because America prints so much that the money just inflates. And more recently, everyone realized all at once that America could just kind of confiscate the dollars whenever it felt like it. Because in 2022, when Russia invaded Ukraine, America and Europe froze $300 billion of Russia's reserves. And every central bank saw this happen and said, oh, wait a second, if we ever piss off America, they can do the exact same to us. Nobody wants their savings sat somewhere that can be just like switched off. You might be asking, all right, but why gold? You know, why not the euro? Why not the yen or anything bloody else? Because they've all got the same problem. Somebody else prints them, and whoever prints it can freeze the money. Gold hasn't got an issuer at all. No one prints gold. That's why central banks have been dumping US Treasuries and buying gold for the last 16 years. And we can see this when we look at the charts. Globally, US dollar reserves dropped from 72% in 2001 to 56% today because most countries are just getting out of the dollar. They're like, I don't want to hold this anymore. Except for the UK, by the way. They've increased their dollar holdings 4 times in that same period and stayed flat on gold for the last decade. I mean, but you know, the UK is special. But anyway, despite the de-dollarization drive, it's been very, very difficult to dethrone the dollar officially because it's not just about getting a better return. The dollar system is so integrated into global trade that removing it is like, have you seen Alien? You know, the movie Alien? It's like pulling the alien off of someone. It doesn't end well. But China has just said, screw it. We're going to try. We're going to try pull the alien off, which is an attack on the dollar. As if it needed any more attacks. It's not doing too well. I'm not sure if you've noticed. But more importantly for you and for me, it's a big win for gold. And in my personal opinion, I believe that it's going to make the last 25 years of gold's performance versus the dollar, which we talked about, it's going to make it look like a warm-up act. Now, if you're a regular viewer, I'm going to talk about the Chinese gold corridor. I talked about this last week on the channel. You could just skip ahead, but I need to talk about this for the new people before we talk about where China is going to send gold's price. Okay, so let me explain what China is building. Say you're a country that sells oil. You sell a load of oil to China, and China pays you in yuan, which is their currency. But why would you want to hold yuan? Not many countries use it, and the same problem as the US. If you piss off China, they can switch off your yuan. China knows that other countries don't want to hold their currency. It also knows that other countries don't want to hold the dollar anymore. So they built a system that lets you swap those yuan for real gold bars, actual metal in a vault in Hong Kong with your name on it. And before you say you can't trust Hong Kong vaults either, this is going to be part of a wider system with vaults all over BRICS nations, and countries can redeem it for gold into their own vaults anyway. But most importantly, this entire chain never touches the dollar. That's the point of it, really. And this entire setup only works if gold is a lot more expensive than it is today. So China needs to push the price up. America needs it to go down. And right now, America is winning, which is why your gold is down like 28% this year. But to be fair, gold is up quite a bit, so you could argue China's kind of winning. But Trump's got midterms coming up. He needs inflation looking dead and the dollar looking strong. And Kevin Warsh, the new chair of the Federal Reserve, is holding rates high to give him exactly that and hinting that they might raise rates. High rates mean that cash pays you more, so why hold gold? That's essentially how the whole thing works. So you've got two superpowers pulling the gold price in opposite directions. But in the title of this video, I talked about a price. China is going to push gold to this price. So what is this bloody price? Let's do some maths. Let's try to figure this out. The world digs up about 3,672 tons of gold out of the ground each year. That's from the World Gold Council, the industry body that counts this stuff. You might be thinking, fine, but if gold price goes up, won't they just dig more out of the ground? Not really. A new mine takes about 10 to 15 years to build. From finding the stuff to shipping the ore, it takes a long time, and that's if permits go your way. It could take longer. Sometimes it takes 20 to 30 years. It's insane. Look it up. So a price spike today does almost nothing to supply for a decade. That's what makes gold behave differently to nearly everything else you can buy. What about the demand for gold though? We need to talk about demand. Central banks have been net buyers for 16 years straight. They took another 244 tons in the first 3 months of this year alone. Call it roughly 1,000 tons a year that they need. Then there's the new bit. Hong Kong's vaults hold around 200 tons today. The stated target for this plan that China is building, this gold corridor, is 2,000 tons inside of 3 years. So that's 1,800 tons that they have to source all of a sudden. About 600 tons per year for the next 3 years. So add this all up, central banks plus this gold corridor want about 1,600 tons of gold per year. That's 44% of every ounce the planet mines before a single normal investor buys any gold at all. So who is selling it to them? Because at 4,070 an ounce, I'm not selling it to them, are you? The metal has to come from somewhere. It comes out of Western vaults, Western funds, Western jewelry boxes, but people only sell gold if the price is high enough to tempt them to bloody sell it. Mine output is fixed for a decade, so the only flexible gold on the planet is metal that somebody already owns and decides to let go of, essentially. And nobody's selling their gold when the world looks like this. It takes a silly price for people to sell. It was at 5,600 and you couldn't get a hold of physical gold. So you have to assume that it has to go higher than that for people to start selling gold. Now, you might say, yeah, but it dropped from 5,600, but that's not because people were selling physical gold. It was almost impossible to get hold of physical gold when prices were that high. That was because of COMEX and their shenanigans, right? And we know that. So, let's move on. Now, going back a few weeks, I did a video and I said $10,000 for gold was plausible, but a bit extreme. And that for it to happen anytime soon, we would need something to properly break in the world, a massive recession, AI bubble popping, etc. But in finance, you need to be flexible. You need to be able to change your opinion when the world around you changes, and the world has bloody changed. Because then the only fast road to $10,000, because it's always eventually going to go to $10,000, but the only fast road to $10,000 was through panic, a crisis, a war, money printers going flat out. That road needs essentially the world to be on fire. This one's different though. You've got a buyer who doesn't care what the price is. There's no sell button, and they've just built a system that forces them to keep buying for the next 20 years. So am I promising you that we go to 10,000? No, nobody can promise you a price, me included. But my point is that 10,000 used to be a number that would need some serious event to get to. A financial crisis, something breaking, I've said this already. But now it just needs China to fully turn on this system they've built and start filling up its vaults. Now, I want to be clear about one thing though. There's going to be some guy in the comments called Chad who loves leverage, and he's going to be saying, so what, I just have to buy gold right now and China is going to make me rich? No, Chad, no. China is not a catalyst for your leverage trades. It's the floor, and floors take years to build. If you need this to pay off by Christmas, you're in the wrong asset class. Gold and silver, they just don't work that way. They can stay quiet for years before they rip people's faces off. And this thing China is building is something that will take years to play out. The dollar doesn't die overnight and gold doesn't become king overnight, but it's going down that path because China is actively attacking the dollar. But as always, let me argue against myself, because I always like to present both sides of an argument. And there's one big reason that this might not work out as well as we would like. America is not a little bitch. The whole premise I've been talking about sounds easy if America doesn't really fight back, but America will probably try to fight back. I'll give you an example. Later today, the Fed is meeting, and there's a 38% chance that they put rates up. It's unlikely to happen, but 38% chance. A week ago, that chance was just 13%. So now we're seriously talking about rate hikes. If Warsh hikes rates, gold gets hit again. Same trade as the last 6 months, it just probably gets hit a bit harder. So Warsh could start hiking rates like crazy. I don't think so, because America has too much debt, and it's going to be very hard for them to raise rates and manage the debt, but you never know. And there's a lot of other things America can do to fight back. So we can't simply count them out. We can't say America's out, China's going to win this battle, gold is going to fly, dollar is going to die 100% for sure in the next year. We're not saying that. But that brings me to the one question about all of this. What do we do as gold investors? What do we do? Now, I showed you the numbers for how gold performed over the last 25 years. It beat the dollar by miles. It beat SPX. It even beat NASDAQ, by the way. NASDAQ would have made you about 130K. Depending on how you invested in NASDAQ, you might have ended up with 150K. Gold made 150K just easily. I do stress, though, that this depends where you measure from. I picked 25 years ago today, but if you pick 2011, then stocks would have won. So it depends where you count from. But the point is that gold performs well over a long timeline. So my question to you is, and I want to have a real discussion about this in the comments. Actually, you know what? I'm thinking about doing a Q&A on Zoom, because people have been asking me, and I'm like, why does anyone want to do a Q&A with me? It's not like I am famous or anything, but people have been asking. I might do a Q&A on Zoom and we could discuss this there, but until then, let's discuss it in the comments. I've got a question for you. Now that you know what gold did for the last 25 years, what do you think it will do for the next 25 years? It's an open question. Let's discuss it, but I'll tell you what I think. I think currencies rise and fall. This fall is nothing new. I mean, it's not revolutionary. It's backed up by the historical record. The American dollar rose, and at some point it peaked. We all have our opinions of when it peaked, but ultimately it doesn't really matter. The point is, now it is falling. It's in its decline. And by the way, this isn't my opinion of America as a country. Americans, don't get mad at me. I think America will remain a superpower for a long time to come. I'm just talking about the US dollar. I think the US dollar itself has peaked. In my opinion, the biggest mistake in history of the dollar was taking it off of the gold standard. When Nixon did that, he set the dollar on a path to its own destruction. And I think the last 25 years were an aperitif, a starter. And what comes next is the main course. And the main course will be the dollar collapsing. And whenever I say this, people say, yeah, but when? When? The when doesn't really matter. The day the dollar eventually dies, collapses, resets, whatever, we'll know 100 years from now what that day was. It'll be in the history books, but it doesn't really matter. What matters is what you do in the lead up to that date, which brings me to the promise I made at the start. I said there are two groups, the large group who loses money and the small group who makes life-changing money. Back in 2001, there were two groups. The large group decided to stay in the dollar, the small group bought some gold, right? Today, in 2026, there are the same two groups. I believe the large group will stay in the dollar and the small group will buy some gold. And I think gold's going to go to at least $10,000 in the next decade, which is why I'm in the gold group. 30% of my portfolio is in metals, gold, silver, a little bit of copper. Which group are you going to choose?